Welcome to Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Let's jump onto the charts. So we had a contraction model. London took out Asia lows. Didn't quite take out Asia highs. And then we've been dropping all of New York. We're back at last week's range. Still waiting for confirmation. But the way this thing is dropping, it might give us confirmation right here. Today is Tuesday. Today we will be creating a new weekly range. So you'll see these aqua lines continue from here. That's why they've stopped right there. So we're close to getting a confirmation, bearish confirmation. Now this is a big drop without any real pullbacks. So we might get a deeper retracement. Let's see. Right now the 20 EMA is all the way up here, near 50. A little under 2 minutes left. Let's see if we do get a confirmation here, if it sticks. One minute, 23 seconds. US 500 here on the right. Almost identical. Way bigger opening gap. And New York's gap all the way up here. We might just get a full reversal. Gotta wait and see. So usually when we have a model like this, New York likes to take out both The low and the high likes to sweep both, if London hasn't already done it. Not to mention we are primarily bullish on the higher time frames. So we're going to be very leery about taking a sell. All the right confluence has to be there. We are under the 238. We have had a cross. Our range is red. So this thing could just want to run down, but like I said, I want to see all the right confluence points now. Sorry. Still no confirmation. That's why we wait for that candle close and that confirmation. Otherwise, it could just pull back into the range. Still no confirmation. So the biggest fair value gap right now is this one. Remember, the indicator paints out the fair value gaps for you. You just have to kind of go in and extend them through. Just to make things easier for you guys. We're actually adding new features to the indicator that are going to help you guys figure out trend a lot faster. It's a multi-time frame panel that'll be up here. Let's change the color of those so we can actually see it better. Now this would be a shallow retracement, but if the 20 comes in here, then at least we would have some kind of a bias, but still no confirmation yet. Without that confirmation, this thing could just punch right through, which I get the feeling that it might want to do since we have not taken out Asia highs. We are still primarily bullish. We had some news drop that pushed the market down. So unless we get a bearish confirmation, we're not interested in a sell. And if we get an early retracement back into this zone, then it might just be setting up for either a deeper retracement or a reversal. Yeah, so this is one of those days we're just going to have to patiently wait. Market slowly pushing up. We have a fair value gap in here as well, which it seems to be respecting. So if we get a bounce off of this and then a push down confirmation, that'll extend the range and bring our 61%, 50% down. And then that would actually make for an interesting sell. But right now, without that bearish confirmation, we're not really interested in a sell. Even if it bounces off of here and then gives us that bearish confirmation, I'm not interested. I would have liked to seen a bearish confirmation first, then a retracement on a day like this. It's all about pattern recognition. As we get familiar with it, anytime you see this kind of contraction model where the midpoints are almost going right the way, like all the way through, they're matched up. Usually New York likes to take out both the lows and the highs. Now in this particular scenario, we have such a huge range, but such a huge opening gap as well, that I see it going all the way here. And then if it makes it all the way up here, then it might as well just push all the way through and give some bullish confirmation. But let's see what time we get that confirmation. We want to make sure it's within 1 hour of this range formation. So no later than 11:30 Eastern Standard Time. Anything past that, we're not interested, because that's when the manipulation starts happening. Slowly making our way towards that fair value gap. Still just patiently waiting. Remember, when these setups happen, they have to look obvious. Right now, with this range, and the fact that our models aren't matching up right now, I'm very leery, and that's how you should be. Trust that inner feeling. Something doesn't look right. That's a pretty big drop. No confirmation, and yet we're getting that early retracement. And it's a slow retracement too. Anytime you get a slow retracement, that's also another sign that it might want to reverse. If you have no confirmation, you get a slow retracement. Right now, it's still respecting this fair value gap. I'm not going to paint it through, but you can see the candle bodies are staying within this fair value gap. So again, if we get a turnaround, a confirmation from here, then a retracement, at least that'd be interesting. But right now, still just continuing to push. 15 minutes away from 11. US 500. Respecting this fair value gap. Still no confirmation though. And our 20 is slowly coming down here. Let's see which one of them takes out the previous highs here first. I don't believe this has yet. Let's zoom in. Yeah, this candle wick. I want to see which one of these two indices takes out their previous highs first. And that'll let us know if we're going to get a deep retracement or not. Both pairs still respecting their fair value gaps. First fair value gaps here and here. About 12 minutes away from 11. Let's see if we can get that confirmation before 11:15 Eastern Standard. So we're getting some reaction now off that fair value gap. Nah, it's still respecting this first fair value gap right here. Trying to get a push down now. Nine minutes away from 11. Let's see if we get a push, a confirmation. Still nothing interesting. We're getting rejection off those fair value gaps here and here. 20 EMA slowly moving down further. Keep in mind the fractal effects strategy was specifically designed to trade between these hours for a specific reason. We get past the New York Open, people get caught right here. or even people trying to trade even earlier. For example, here, we wait for the dust to settle. Sure, the moves are a little slower at times, but they're also more telegraphed. We're getting some rejection off those fair value gaps. Let's see if we get a confirmation. So just waiting for confirmation. 3 minutes away from 11. Our goal is only to be watching the market for about an hour. 1 hour with a potential chance of making 3% a week, 12% a month, one successful trade, 1 to 3 risk to reward. That's what we're aiming at. So just waiting. Still respecting those fair value gaps. Open has. And US 500. Still respecting those fair value gaps. 20 EMA is now within this fair value gap of interest. But again, we have no confirmation. So either we get a confirmation first, bearish confirmation, then it shoots up and taps this, or we get an early retracement, it hits this 20 EMA, taps this fair value gap, then pushes down and gives us our bearish confirmation. Until we have that confirmation, we're not really looking. Ideally, we want to make sure that we're matching up our session bias with our overall daily bias. Right now, again, on the daily, we are bullish. Our session bias is bearish. So we're waiting for the right confluence to even see if this thing wants to push down further, or if we even want to take it further. Yeah, so we can't get confirmation on this candle. Got 1 minute, 15 seconds left. Let's see if we can't get confirmation on this candle or the next one. We're past 11 now. Our goal is to see a setup, a high probability setup, hopefully for the next 25 minutes. Seventeen seconds left. Okay, market pushing down now. Let's see if we get that bearish confirmation. Close to a bearish confirmation. 3 minute, 30 seconds left. So now we get that bearish confirmation. Once we get that bearish confirmation, I should say, we want to see a retracement back to the 20, back to this fair value gap. I want to see it take out these highs first. So the fact that it took so long here consolidating, I want to see it take out all these highs. Same thing with US 500. Two minutes, 15 seconds left. One minute, 22 seconds left. We'll see this confirmation stick. Then a retracement. Now as this continues to drop, we stretch the range out. Still making for like a shallow retracement. I would have liked to seen 50% drop right into this zone. So we have a confirmation finally. Now let's see where the market wants to go from here. But we're not interested until at least comes back up, touches the 20 EMA. I want to see some kind of gesticulation happening here that really shows us that this thing wants to push down. Otherwise, we're going counter trend, which we don't like to do unless it fits all the criteria, which it doesn't right now. Let's see if this next candle wants to retrace back up into the range. Still no reaction yet. Still just sitting there. 1 minute, 34 seconds left. So if it closes down here and leaves this fair value gap open, and this one, that means it's extremely bearish. And this thing could just push from here without doing another retracement. But that's what I mean. We're not interested until we see all the points of confluence. Otherwise, we're taking a counter trend trade, which we don't want to do. That's low probability. Got about 15 minutes left in the stream. Let's see if we can find a high probability setup. Otherwise, we will skip this day. We don't want to be sitting here. 1 hour, that's it. That's all it should take. That's how people blow out their accounts. They'll watch the market all day long. They'll win, then they'll lose. They'll win, then they'll lose. We're just looking for that one high probability setup, and we're willing to wait for it. If we don't get it, we don't get it. So right now we've left this fair value gap open, which turns this into a breakaway gap. We're extremely bearish right now. But until we hit that 20, I'm not interested. Until we draw back into the range. Now, if we had hit the 20 already and then we had confirmed bearish, that would have been a different setup. I would have most likely looked to one of these fair value gaps, but until it hits that 20, and that 20 could come all the way down here into these fair value gaps, but until that happens, we're not interested. We will now, though, paint out this fair value gap, one that price was respecting, since we've already passed this one. This is still now our point of interest, but I do want to see it sweep these highs first. And again, if the market just continues to push from here, then there's nothing we can do about it. Now in the 15-minute time frame, we are getting divergence on the TDI. So whereas price set a lower low, the TDI, we did not break the previous lows. This might be an indication that it wants to push up from here. That's just one point of confluence, so let's wait and watch. On US 500, our 20 EMA now sitting in that fair value gap of interest. But until we take out the highs that were set during this time, I'm not interested. Now all these become telltale signs. So if we do take out these highs, that means we're going to have to go above the 20 EMA. So if we wick above here, above the 20 EMA, but then still close under here, at least that's a strong indication that we want to push down. Otherwise, we could retrace all the way back up to the 50, and that would put us, at least on NAS, that would put us near 50 to 61%. So that's what that green line is. That green line indicates the highs that were set during this consolidation. Got about 10 minutes left. If you don't see that retracement and that top of that 20, we will most likely conclude this session. Ideally, we do not want to be taking any sells when our daily bias is bullish. And that's what this new feature of the indicator will show you. As mentioned before, you'll see a panel up here that'll let you know on higher time frames if the market is bullish and bearish, and then we want to match this. We want to make sure that we're not taking counter trend trades. Will we get into even less trades then? Yes. But will our probabilities increase even more? Yes. We want to be in the safest trades possible. Remember, there's thousands of strategies out there. Some of them are trying to scalp 20, 30 pips. Some of them are longer swing trade holds. Some people are trying to make fast money. What we teach here is a high probable way of trading. High accuracy, high probability, that's what we're going for. And when we find those trade setups and we make sure we have our risk to reward correct, there's nothing better than that. Then you can safely take these trades. Move your stop loss faster to break even. Make sure you're in a successful trade even faster. That's the point. You don't want to be stuck in nail-biting trades. You want to turn this into a career. This should be your day job, 1 hour a day. But in that world, you can't be taking just random trades, hoping that you make some fast money in a move. That's not what we're going for. Well, 7 minutes left. Not sure if we'll get up to the 20 EMA. But again, since we are bearish during this session, until we take out these highs, I'm not interested. Where you only need one high probability successful trade a week. We're willing to wait for it. Nothing here that's interesting as of yet. So this is the last candle in our stream. 5-minute candle. We'll be concluding the session at that point. I don't see it getting up here in the next candle. And the fact that the 20 is now below those highs Lets me know they're going to try to pull some manipulation here. You're going to get a rejection from here, where most people might enter, and then you'll get another deeper retracement, even possibly to the 50 EMA, closer to the 50 Fibonacci levels, and then a drop if they're going to do a drop. Because remember, when you have this much of a drop, they want to punish people that are going short. They want to turn it on you, scare you, or possibly even just reverse it to take you out. That's why we wait for that retracement. The fact there is no retracement yet, or no proper retracement that we can actually bank on, that turns this into a low probability trade. Anything below 70%, we're not interested. Three minutes, 25 seconds left. US 500, trying to push past this fair value gap, heading towards the 20 EMA. Minutes, 40 seconds left. Please make sure you check us out on fractaleffects.com, where we teach high probability trading. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. Right now we are currently live Tuesday, Wednesdays, and Thursdays. That schedule will be changing, but we'll obviously update you guys. 2 minutes left. Now slowly starting to push up. US 500 now making its way towards the 20 EMA. But again, until it takes out those highs, it's not even interesting. And in doing so, it'll push past the 20 and most likely even retrace to the 50. So if it takes out these highs and closes above the 20 and doesn't have an immediate reaction down, then it will most likely retrace to the 50, closer to the 50%, the 61% before doing anything, either pushing all the way up or pushing back down. Remember, if we're not in a high probability trade 1 hour after the range formation, which is 11:30, then our probabilities decrease, which we're not interested in. So we got about 20 seconds left. Now again, in the next candle or two, it could push up here, take these highs. But at that point, our bias changes. We want to see if it drives even higher than to the 50 possibly, which pushes us closer to noon. Our goal is to be, even if we're in a trade, we want to be out before noon. See, again, a whole bunch of gesticulation. It'll take its time getting up here. So we'll conclude the session there. And we'll be on again live tomorrow.